Reits by Preston Patton. So Reits has a lot to deal with real estate, and if you're like me, you don't understand anything about it. You've never even heard about Reits because you know absolutely nothing about real estate. So I'm going to simplify that for you and give you a little bit of background on it, what it is, what the current trend is, and what you can expect from it in the future. So a REIT is an acronym actually for Real Estate Investment Trust. It was created under President Eisenhower in the 1960s, and the first REIT company was actually in 1961. Now a REIT, or Real Estate Investment Trust, is actually a company that owns or operates income that producing in real estate. So essentially what they do is they take money from investors, and then they'll take that money or those investments that they've received, and they'll put that into different properties that either they own or they operate. And what that does for the investor is they receive dividends from the REIT company, and it is a source of income that that person can have. A REIT is comparable to that of a mutual fund or to stocks. That operates in the same way. You can put money into an account. That account is then put into a bunch of different properties that either you choose or you can have someone that handles that all for you. And that way your investment continues to increase over the years. Since starting in the 1960s in the United States, there are now currently more than 30 countries that have REITs, and you can invest in all these different ones. You just have to make sure to keep track of all of them. So like I said, now we have a process of a REIT, and it was previously gone over. So first there's us. We are the investors, and we're going to put our money, or we're going to purchase, we're going to make purchases into a REIT company, much like we make purchases of stocks. And the REIT is going to then have that money into different businesses or real estate, really, businesses, buildings. It might be into apartments, industrial areas, and so on. And as the value of those properties go up, the REIT company or the real estate company, they receive payments on that. And then from those payments, in order to keep their taxes down, they actually pay about 90% of that back out to the investors as dividends. So it's a pretty good way that you can earn money, but it is like stocks, and it can have risks involved. REITs do follow our GDP, and that, if you don't know what our GDP is, that's the real good domestic product, general domestic product, and that has to do with the economy of the nation. You can see that as we had a recession, that the percentage of return in a REIT actually went down, and that's actually to be expected because people are no longer building up their companies, and they're not investing much anymore. There's not people investing in housing, apartments, and so on, and so you're not going to get a high investment out of your trust. But as the economy kicks back up, you got people starting to build more houses, build their companies, expand, and you get the trust to go up, and you start to get money back. So like I said, there is risk involved. And like I said, it does relate to the RGDP, and as we can see in the forecast of what the RGDP is actually forecasted to go up. You can see that little dip in there. That is actually during the times of one of those recessions. So as we came out of that recession, we're going to go up, and we're actually going to get that money back. So that's about what you can expect from the REITs here in the future. Now, that's just a brief overview of what a REIT is. It kind of gives you an idea, so that if you hear the term, you can use that further to you have a little bit of further understanding, so that you're not completely lost, and will help you understand things in the future. Thank you.